Welcome back to episode 26 of VW Exchange. My name's Adam, along with James, and we're super excited to bring you an episode today.
Happy to be here. Happy to be here. Big news came up since our last episode. Trump's nominee for new chair of the Fed, head of the Fed, Kevin Warsh. That's the name on the street. So a little bit unexpected. I think a lot of people kind of thought maybe they would go Scott Bessent, but it's Kevin Warsh. He served on the Reserve Board of Governors from 2006 to 2011. So he was around during the '08 financial crisis. Um, well respected in his field. And I don't think it's really the route that people expected Trump to go with this pick. And um, I don't know. Any initial thoughts, Adam?
Yeah, also think that wasn't the initial route that people were expecting. I remember seeing names like Chris Waller and then this BlackRock guy, Rick Reeder, I think popped up towards the end. But I remember you can bet on these things now with Kalshi, so you can always see who's the front runner. And yeah, so I thought this was an interesting pick, and I thought like the most interesting, I'm sure you'll talk about the market reaction a little bit more, but like the most interesting part of the reaction was the reaction in gold and silver, at least to me. I know it moved some other stocks and things as well. But we kind of were talking about like what's going to be the thing that ends this like 15-month or whatever it is bull run in gold and then sequentially silver. And it seemed to be a different Fed chair and maybe a new guidance there as far as what the forward policy is going to be is what ended up at least stopping the run for now. Obviously, still on a relative basis, I think you put the chart there. It seems like it's still significantly up from, I'm sure even if we went past November, it would look like even bigger increase. But I thought that that was definitely notable.
Yeah, yeah. I think a very interesting market reaction. So kind of brought it up a little bit, but gold got absolutely slammed. Silver had its worst day since 1980. Bitcoin fell below 65,000, which we can talk a little bit more about later. But um, a lot of these assets dropped, and I think that a lot of it can be attributed to the fact that I think people, if you're looking at the Federal Reserve, there's a little more confidence installed at this point. I think that for a while there, we didn't know if independence was going to remain. Is it now a political position? Are interest rates just going to continue to be slashed for generations to come and inflation run wild and US debt become unattractive? But it seems like Warsh is going to have a little more of uh, a stronger voice in terms of keeping things in check. And although he is, going to continue to cut rates and move in the direction that Trump wanted him to move in, it seems like he's going to really pay more attention to the fundamentals and all this is going to make U.S. debt more attractive. And we saw the dollar rise. So
Hmm.
that's, and that's been a rare sight recently to see the dollar go up. But um, yeah.
Yeah, no, interesting. Interesting. I didn't know that about the dollar. And I thought like what was notable to me, I mean, obviously there's a rate path in the future that you think would be dovish, especially assuming that they like, interviewed the heck out of all these candidates, and that seems to be like the one criteria that they care about. But I thought what was also great, and maybe just to read this quote, I found he did an interview with the Hoover Institution in I believe May of 2025. Um, but so Warsh was at the Fed during the financial crisis and was one of the people who helped orchestrate this TARP program that was going to buy these troubled assets from all these banking institutions so he could continue to lend. And it seems like that he's almost had some reflections on such. But here's a quote. A lot of the battles I'm fighting seem to be battles from 2 decades ago. My criticism came when the practice of quantitative easing shifted from an urgent tool for liquidity in the banking system in the fall of 2008 to a permanent mechanism for holding borrowing rates down. The Fed's bloated balance sheet, designed to support the biggest firms in the bygone crisis era, can be reduced significantly. what that seems to me is that it's going to end the money printing side of the inflation story because obviously there are rate cuts and that might stimulate demand, stimulate real growth in the economy and investment and such. But when you're printing money, that's going to be something that isn't going to be good for the dollar, and also that's going to make a lot of these other central banks potentially run into gold and silver and make it less likely for USD to be what they're using in their transactions because they're not sure if the dollar value is going to be stable collateral for those. So I thought that that was something that was specifically notable, especially considering like all the conversations that we've had on, potential money printing out there.
Yeah, no, this is a huge thing, and kind of I was watching another interview from him, and basically I think his point of view is that okay, if there is a crisis, the Federal Reserve should come in and supply tons of money, supply tons of relief. But if we're not in a crisis scenario, there shouldn't be any money printing or inflow going into the economy. And that's something that we've seen a lot under Jay Powell and kind of continuing the money printing. Inflation's kind of been difficult. I even was watching something the other day, and someone was proposing the idea that part of the wealth gap can actually be attributed to this money printing because a lot of it is just going into these assets that the wealthier own. So it's driving up stock prices, even driving up home prices. Um, so I thought that that was something interesting as well. But it seems like Warsh is kind of just gonna let things ride out, and maybe if the economy is on the brink of a recession, it can tilt us over and maybe, there could be effects in that way, but I think there is hope that it's gonna protect against inflation in the long run. And yeah, that was the market reaction because as the dollar gets stronger, those commodities like silver and those precious metals, gold and then Bitcoin move the opposite direction.
Right, right. And I think that like what he says in this other quote about that, whenever the Fed comes back into action, more capital is misallocated, more institutional lines are crossed, and the Fed's compelled to act even more aggressively. And that's like to what you said, that obviously when there's a problem, stepping in, but if there's a way to limit that influence and get in and get out, that would be a much more prudent path for them because right now it seems like the risk is that the central bank and our commercial banks and our, mega investment banks, I guess our mega investment banks specifically, have kind of become, linked at the hip with the Federal Reserve in terms of that whenever they have a problem that they can lean on the Federal Reserves for excess cash and continue to supply credit. Like that's good for Main Street at the time, but long term, obviously, you can see how that might create bad incentives. So, I'm definitely a fan of that sort of policy, but we'll see. I mean, we'll obviously have to wait and see for the results and wait to see how much Trump's influence is kind of reigning supreme here, especially as we kind of look towards midterms in 26, I want to say. So
Yeah,
27 maybe.
see if they let it run hot, see what happens. But um, our I think that one of the big stories here was Bitcoin, and maybe we could jump into it a little bit deeper. But um, just a little piece from the Financial Times, just kind of going into Bitcoin, and we saw it slip to 65,000. So completely erased all the gains that it made since Trump was elected, and vowing to make the U.S. the crypto capital of the world. It's back up to 70,000 as of now, but still a really major drop off. It was sitting around I believe it got up to 120 at one point. It's been closer to 90 in recent months, but sentiment is kind of stalling, and I think that that was kind of the main theme of this, and investors returning to precious metals more, as of course what we are just talking about, and um, it's kind of interesting that that became the hot topic, these precious metals. You don't think that it's something, I don't know. I think that there's a lot of appeal with Bitcoin in some way, but I just thought it was funny that everyone resorted to these precious metals, and that's been the real sentiment. And it hasn't been Bitcoin, and there's been a lack of legislation being pushed for. You know, I think that. I don't know. It's a weird case.
Definitely a weird case because I remember when we were talking about Bitcoin becoming uncorrelated with gold and uncorrelated with the rest of the market, where you would think that in a time where people were worried about inflation or were having a risk off appetite, that's when people flock into gold, but it seems to not be when they flock into Bitcoin and they're selling off Bitcoin then. And then when we have these moments too where there's a new Fed chair who's claiming that he's going to be less inflationary, again, that's a time where you see people sell off gold and they also sell off Bitcoin. So it seems no matter what happens, there's a sell for Bitcoin, and Bitcoin might just have its own separate market cycle. And that market cycle also doesn't seem to be driven by anything that we can really get our hands around. That it doesn't seem to be driven by actual transactions that take place in the number of Bitcoin or flows of Bitcoin across borders for like real use cases. And I think that that's something that by design is probably pretty hard to track. But it seems to be have its own kind of flows, and whether that's part of a social media Reddit circus, that's what it seems to me as just a skeptic. But there's also that element of where it's hard to really track how much it's being used. I think that that's ultimately what's going to drive the values. Like if people can see a real use case, because right now, what I thought that it should be is something that's just a more liquid gold in terms of transfers, etc. But it doesn't seem to be behaving that way.
No, yeah. It seems like it's more dependent on the on the deterioration of the dollar and bigger issues that we've have going on, but it just hasn't gotten there yet, and people maybe still don't know enough about this product and or just don't have trust in it and are just resorting back to old reliable. Even though there is still like I read this thing from BlackRock, their iShares Bitcoin Trust, their Bitcoin ETF had over $10 billion in trading volume in a single day. But it's I don't know. I mean, it seems like it would be a very popular product and people are finding ways to invest in it. And Financial Times mentioned that a lot of people have these leveraged positions in these Bitcoin products, and a lot of them are getting margin called, which was forcing the price down even more. So
Hmm.
I don't know. I guess for me, I'm kind of confused how like having these ETF products of Bitcoin, doesn't that kind of take away the purpose of it? I don't know. I don't know. But I just think it's I just think it's funny. There's too much going on with this now. I think there needs to be a little bit more legislation and universal adoption before um, it can really have a more central place in in finance.
Agreed. Agreed. And I think too, thinking about what's going to be best for these big institutions long term and their reputational trust is that I'm sure when they have a lot of older clients who are seeing the hype of youth and teens and millennials and Gen X around Bitcoin and their excitement about it, that seems to be just a lot of retail and dumb money in those products right now that you might not want to be associated with, or you might not want to expose your clients to and give the stamp of endorsement around it. But it's also, you're in a tough spot because you also be the one who's innovating and doing things that are new, because those are ones who are getting their valuations go like crazy. If you're looking at people like Robinhood or Polymarket or Kalshi, the people who are doing the new stuff, they're the ones who are getting a lot of the valuation spike. But we'll see if that's a long-term thing because firms like BlackRock or JP Morgan and their involvement with Bitcoin, there's a lot more potential reputational risk because they're not the new upstart. They have a lot more to lose than some of these other firms who have bet the whole company on it. So that's something interesting to me is trying to track their relationships with it and how much they lean in and how much they don't.
I guess that would be a pretty terrible headline. JP Morgan loses $500 billion in single day Bitcoin sell off. Probably
4x
wouldn't be a
levered
great.
ETF, yeah.
Why is my retirement money in levered Bitcoin holdings? But Yeah, so we'll monitor that. But as you were talking about valuations, I think that's a good time to maybe bring up this next private equity story if you want to jump into that for us.
Sure, yeah, and this is really this is kind of more on the software sell-off more generally, but this article from Bloomberg specifically highlighted the private equity implications on it because one of the places where we've seen a lot of private credit deployed and a lot of private equity deployed is in the software space because these were seen as high margin, low capex, recurring cash flow, like subscription-based businesses. But what's coming out now is that the moat of these businesses is under question of how easy it is to maintain your moat in a world where Claude can do a lot of the coding for these companies and they can have their own way of reaching out to customers. They can have their own customer relationship management. They can have other software products that are built in-house with little expertise and really bring down the upfront costs, the human capital costs, because Claude is apparently just about as smart as some of these software engineers of making these new products. And I think it's an interesting shift because when we've talked about AI in the past, it's that AI is going to be good for the stock market and really help a lot of these companies do well. And this is kind of one of the biggest events that we've seen of AI as a story that is bearish for the rest of the market. But to me, right now, it seems that what happened to the market was more of a rotation out of some of those software stocks, and a lot of that money came into me just focusing on real estate. A lot of those stocks went up. More defensive consumer stocks were able to go up. So I think that that also might just suggest that those AI tools, that the cost of them seems to have like come down to the floor, and a lot of those software tools have also the cost have come down to the floor. Is that it's going to be more easy to integrate these products potentially into some of these other firms that would normally be paying a higher price. But so that's kind of the bones of it. But to give more on just the private credit side, the obviously the issue is here if the moat's disrupted, that the private equity firms are taking a loss, the private credit firms are potentially not making full recoveries, specifically because there aren't too many assets under these software as a service companies to as collateral. So that's kind of what the article is pointing out and something to watch.
Yeah, I think it's very interesting that AI is becoming disruptive in this space. I mean, I'm just a naive economics major, so I guess I don't know enough about it. But to me, when I think, I kind of think tech under the same boat. But it's, I don't know. This is something that's very interesting. We had cited here that UBS said that we expect defaults to rise 2 to 4% in high yield, 6 to 8% in leverage loans, 12 to 13% in private credit. Yeah, I mean, if you told me that, software was going to be bringing down private credit or causing some issues there, I would be very surprised if you told me that a few months ago. But Anthropic is doing some crazy things, seeing a lot of success. Um, Sparked a $285 billion rout in stocks across software, financial services, and asset management sectors recently in one day. So um, obviously some huge implications here. Um, and yeah, if as you were saying with collateral, they don't really have that collateral, so a lot of these loans are just going to go bad, and that might be it. So definitely, that's tough.
Yeah, it could be messy. And just to give the quote from the article, it says Anthropic's Claude Code and other vibe coding startups are disrupting traditional SaaS by allowing users with no coding experience to build software. That's dramatically lowering the programming skill barrier and undermining rigid one-size-fits-all products. So I thought that that was just kind of a good breakdown on what exactly is going on. And what that means is if the mode's disrupted, uh, that could be a problem as far as making these people be paid back, but also on valuation on the multiples that these companies were getting. In the article I was looking at from Bloomberg, I think that these were trading at 24x EBITDA multiples in 24. Now in 25, it's 18x. So you've already seen the valuations start to come way down based on the cash flow profiles of these businesses because when you're lending against them, you're trying to monitor it. Like, how long can I count on these generating enough subscription or cash flow revenue for me? Because to what you said, there isn't too much else there. You're just betting on that IP like being defensible. And right now, it's very unclear how defensible a lot of these companies are. And I think what sold off is A, like software sold off as a whole, but also these asset managers, KKR, Ares, people were private sector, some Ares Blue Owl got crushed. KKR was also notably down, TPG, etc. Um, I personally thought that that was an interesting investment opportunity because like these are huge businesses and the amount of software, private credit loans that are part of them has to be like it can't be that insane, I would hope. But so I thought that those were interesting. And then the BDCs that we talked about as well, like talking about I forget we looked at Goldman Sachs's BDC or
Mhm.
in our investment club, we looked at Blue Owl's BDC, which continues to get crushed by the default rates on these loans. But that's kind of a good insight of talking about private credit, where normally there isn't that much data coming off the presses for us to look at. But through BDCs and seeing how they trade, you can kind of see how market sentiment is changing. So I thought that that was kind of a good insight there.
Yeah, BDCs were spoken about again. But yeah, I think that's something else that's very interesting. Robert Dodd, an analyst at Raymond James, cited that if your business is in healthcare, the fund classifies it as healthcare exposure. So when you're thinking about how many companies are actually based around software, it's a
Mhm.
lot higher of a figure than maybe the numbers would show. Maybe if your portfolio says it's 10%, maybe that's just straight SaaS, but there's also these healthcare sectors or, tech, whatever it is. Um, there's a little bit more going on here and
Right.
um, keep turning to private credit. Even Apollo said they cut their direct lending funds software exposure by half in 2025. So I don't know. We'll see how it all unfolds.
We definitely will. And the one thing that like we should be thinking about too is if private credit's struggling, it also means that the equity side of this has to be struggling as well. Because we
Yeah.
know that private credit normally a lot of these are sponsors, financial sponsors who are the equity piece of these companies. And so if their businesses and their margins are collapsing and their valuation multiples are collapsing, that means the sponsors have to be under some stress as well. So we'll see what ends up happening with that. So obviously, private credit and private equity, it's almost one, it should be one kind of topic when we're thinking about distress and possible, um, you know, hardships on these businesses, specifically when you're thinking about the distress in the actual portfolios. And then I think pretty soon we're going to see it in fundraising because it's going to be really hard to raise money around these sorts of headlines. And maybe there are distress opportunities these folks can capitalize on too. But if you just lost their money in the software private credit fund, it's probably going to be pretty hard to raise it for the distress fund. So we'll also see how that plays out.
Yeah. Yeah. Great points. We'll see how it unfolds. Maybe. I have a more important question for you. Who's winning tonight?
Oh man. I'm still in Rhode Island, so I feel like in the New England territory, I gotta be rooting for the Pats and maybe taking a day off of school for the parade if I'm that lucky. So that would be the hope. How about you?
I'm going Seahawks.
Oh man.
I'm going Seahawks. That defense.
Moment steps out of New England just betrays the whole region.
I've
Brutal.
never had any allegiance to New England. But how about this article from the Wall Street Journal? Um, Talked a little bit about some of the ads that we have going on that we're gonna see. Um, the healthiest yet. So got some, weight loss ads coming out from him and hers and Novo Nordisk and with their Wegovy pills. Um, I don't know. What do you think?
I think this is kind of interesting because You mentioned Novo Nordisk and Hims. That Novo Nordisk is currently selling Hims because Hims is selling knockoff GLP-1s at half the price of Novo Nordisk, like trying to undercut its business. And then we have Anthropic is taking a stab at OpenAI on that. I believe we talked about that ad story about, ads are coming to AI, but not to Anthropic. That's the heart of the ad. So just some very fascinating ads that'll be button heads. I'm sure a lot of people will be tuned in for those. And I mean, Hims and Hers is fascinating business that just thinking about the economy as a whole and like short term versus long term. Of short term, it seems like it's great to health costs need to be get down. People need a lot of these drugs for their health. But long term, it kind of destroys all the research and R&D if people can't trust that they can get a patent and Hims and Hers is gonna steal their thing at the last minute. Um, so fascinating business. Hims and Hers famously also had an ad in the past Super Bowl that made their stock go up 30%. So we'll see if they're able to have another blowout performance, but having a good ad can really help your business for sure.
I think we'll see a little pop from them. That's my prediction.
I like that. And Big is in on that, so we'll see if that works too.
Is that you don't have to sign an NDA with that club? We can say that.
Well, well, it's already said, so we'll see if we get a lawsuit from our friends there.
Well, yeah, healthiest Super Bowl ads ever. We'll see about that, and we'll see who takes it.
Yep, we definitely will. I'm not sure that I like Sam Darnold fourth quarter game on the line. I'm not sure I like Drake May either there, to be quite
Uh,
honest. But we'll see how that unfolds. I'll definitely be tuning in. I don't know if you will be at what, midnight to 4 in Denmark.
we'll see how long I can make it.
Yeah.
But Novo Nordisk, Denmark represent. So
Oh, let's go.
yeah,
Awesome. All right, I think we'll probably call it there. I think we were still able to get a lot of meat out of that episode. Really appreciate you all for joining us as always, and thank you.
take care, everyone.